It's time for Charting Futures, where we dive into the futures markets through the charts. Today, we're taking a look at copper, and at this time, spot copper is rolling over. This is an intraday chart. We see that copper is down about 1.5%. This as the dollar pushes slightly higher. That dollar strength could be acting as a bit of a tailwind, or a headwind, on copper at this point. But despite dollar weakness on the year, copper is also lower on the year. Now, this is a year-to-date chart of the front month contract, and we see a modest decline. Actually a pretty decent decline, down about 6%. Lots of volatility. So clearly there is not any sort of a metal tariff tailwind here for copper. Perhaps investors are fearful of some sort of a trade war, what that might mean for copper. Let's take a closer look at this volatility, though, by going into the Bloomberg. This is #BTV 7276, and it's a multi-month chart of copper where we see copper trading in this range. This represents lots of uncertainties on the part of the buyers and the sellers. The buyers and the sellers duking it out, a battle. Neither has taken charge. But so long as copper can climb back above this blue line at about $3.12 per pound, it suggests that the next move within the range is probably for the bulls, the buyers, back up toward the top of the range near $3.25. Now, if we dissect that volatility on an even more minute level and hop back into the Bloomberg to take a look at an intraday chart, it may support the idea that copper could in fact climb higher. Now, if we take a look at #BTV 9159. This is an intraday chart of copper that shows this is a multi-month chart of copper, but on an intraday basis. This pattern here is called an bullish inverse head and shoulders pattern, and it basically points to the idea that the buyers may be looking to take control of the very near term from the sellers. It confirms if copper climbs back above $3.13 per pound for a target of above $3.25, and right now it's shaping up to be a beautiful, complex inverse head and shoulders pattern. So how do you trade this through the futures market? Here's the description page on the front month contract of copper, and we see that the size of the contract is 25,000 pounds. That's worth almost $78,000. A 1-point move is equal to $250, and the initial margin is about $3,400. So both of those charts we looked at suggested copper could move back up to $3.25 per pound, or by about, let's call it 10 to 15 cents. If that happens, that would equal a move up of copper for about $3,800. More than the initial margin cost. So that's a pretty interesting idea to keep in mind. Stops are always considered smart, protective stops. So that's a look at copper, the copper technicals, and one way to trade copper futures in Charting Futures.